Hello everyone. In this video, we will be learning about Accounting Standard 4, that is contingencies and events occurring after the balance sheet date. What happens if there is some situation before the balance sheet date but the event is happening after that? What is the definition of contingencies? What do you mean by event? What actually Accounting Standard 4 is catering to? That we will understand from a particular story. Let's begin. See, suppose I tell you that our financial year here is 1st April 2022. Okay, it will end on 31st March 2023. Simple. This is our financial year. Now, the important information here is that whenever the financial year ends, we prepare annual reports, or you can say financial statements for this particular year. We all know what are financial statements: profit and loss statement, balance sheet, cash flow. These are our financial statements that we prepare for the entire year. Now, after that preparation of financial statements, what are we supposed to do? We are supposed to approve that. Who approves that? Shareholders approve that. Okay. So, approval of financial statements is done by the shareholders, or you can say the members of the company, in the annual general meeting. Okay. Now, this is the date, approval of financial statement. Let's say the date is 30th September. This date can be any date. This date will be given you in the question itself. Okay. Suppose there was this annual general meeting of all the shareholders and they are approving the financial statements. Okay. Because this is the right of every shareholder to know the financial position of the company. So they will check what is happening in the company. They will get all the information, all the financial information, what the business is doing, what the management of the business is doing. Okay. That is board of directors. Now, understand this one thing. What this AS4 will help us in which area? Understand. Suppose, say our year is ending on 31st March 2023. Let's say on 10th March here, 10th March, there is a fire incident, or you can say fire incurred in the factory of our debtor. You can understand this like this. Suppose we sold goods on credit. Okay. Now we sold goods on credit, say 1 lakh rupees, and that debtor told us that I will pay you after 2 months, in April, May, June, whenever. Okay. Now what happened on 10th March? On 10th March, there was a fire incident in our debtor's factory. Okay. This is the situation. This is the happening before 31st March 2023. Year has not ended yet. Okay. Now I am thinking, if there is the factory, if there is a fire in his factory, then will he be able to recover the loss? Does he have any insurance policy? Will he get back money from the insurance policy? What is happening in the business of my debtor? See, now you will be saying, sir, why are you interested? Arey bhai, I am interested because I have to receive money from him. Simple thing. So I am interested in him, that whether his business is running properly or not. Now, if the information is given that there was fire on 10th March. Okay. Now this fire on 10th March has already happened. On 31st March, when I prepared my financial statements, I wrote in the balance sheet that in current assets that I have a debtor of 1 lakh rupees. Okay. Let's ignore all other debtors. We are just representing this information. Debtor is rupees 1 lakh, because see, I was thinking I have to receive money from my debtor. There is no problem in that. Now think what happens after 31st March. Say after 31st March, on the day of 10th April, on the day of 10th April, what happened? This debtor called me and told me, I will not give you a single penny. I am not giving you any money. My factory is already burnt. Everything is gone. Now you also forget your money. Okay. You can say, sir, you can file a case against him, you can file a suit against him, but that and all are different things. That will be happening or not happening, that we will see in the future. What happens if he declares himself insolvent? That and all this AS is not covering as of now. Understand this. What we are covering? That from the 31st March 2023, that is the date of our balance sheet. Understand the dates are very, very important in accounting standard 4 and in our lives also. Now, 31st March 2023 is the date of balance sheet. 30th September is the approval of our financial statements. Simple. Between these two dates, this day of 10th April, our debtor called us and he is saying, I cannot pay you any money. Now understand this. If I tell you that there has been a rain in my locality, can I tell you one thing, that if it is raining here, okay, then there would be definitely some clouds here. Understood? Without clouds, can there be any rain? You will say, sir, no, it is just impossible. So understand this. The clouds are the necessity for any rain. Understand this. If the rain is happening, it means there are definitely some clouds. Simple. Taking vice versa, if there are clouds, it is not necessarily that there will be rain. It is not necessary, okay. There might be a case that the clouds came and went off and there was no rain in that particular area. It can happen. But understand, if there is a rain in the particular area, obviously the situation was, or the pre-necessity you can say, कि अगर बरसात हुई है तो बादल तो पक्का रहे होंगे. बिना बादल के तो बरसात हो नहीं सकती. It is impossible to have rain without the clouds. Now, what I am trying to explain here, understand please. See, I am trying to explain that if any event is happening, the event of, suppose insolvency of our debtor in our case, if any event is happening, there would be definitely some condition before that. There would be definitely some situation before that. See, on 10th March, we already knew that there is a fire incurred in the debtor's factory. We had this knowledge that if there is a factory, he won't be able to pay. But we were hoping for the good that what if he has some insurance policy? What if he gains a refund from the insurance policy? It is good for us. But now on the 10th April, he is saying, I cannot pay you any money. Now understand this. 10th March, fire incurred. 31st March was the date of balance sheet. Balance sheet has been prepared. On 10th April, the debtor confirmed that I will not give you a single penny. Now, what are the board of directors, the management of the company are thinking? They are thinking, we have to present our financial statements on 30th September to the shareholders, to the owners of the company. How should we tell them this? That one of our debtor has already told us he will not give us money. See, the question in front of them is, if he would have told that I will not pay you money in this part or in this particular year, then we could have easily written that they are my bad debts, okay. But the problem is, financial statements are already been prepared. Understood? Financial statements are already prepared. This thing has happened after the year end. So the question in front of board of directors is, understand now, that when I got to know that on 10th April they have become my bad debt, should I record bad debt in this year or should I record bad debt in the next year? This is the question in front of the board of directors, and the question and the answer of this particular question will be provided to us by AS4. Understood? Now what AS4 is saying? AS4 is saying contingencies and events happening after the balance sheet date. See, contingencies and events, what does it mean? Contingencies means what are the situations or what are the conditions already we have, what are the situations before the year end. Our year end is 31st March. This was the condition, this was the situation, or you can say this was the cloud. We already had some knowledge, okay. We cannot say that we were entirely ignorant about the debtor. We had some particular knowledge that, okay, on 10th March we already know there is fire, there are very less chances of getting the payment from him. This is called as contingency. Contingency means there we do not know whether we will be receiving money or not. It is contingent. What is the word contingent is meaning here? See, we will be declaring, we will be learning about contingencies and all. By definition is AS29. I am just telling you the meaning right now, how much is required for AS4, okay. Contingency means there is already some condition, okay, but it depends on the happening or non-happening of any future event, that how we have to record it. Understand this. there was a contingency that fire already took place. You can say contingency, you can say condition, you can say any situation. There was already this contingency before the date of balance sheet. Now, event of insolvency of a debtor happened after the date of balance sheet. This is the meaning of contingency and the event which takes place after the date of balance sheet. AS4 tells us that for any event, if there was already a contingency before the date of balance sheet, then that you have to give effect in the financial statements. That is your adjusting event. What does it mean? Understand. We know that the board of directors were confused. What are we supposed to do? So board of directors said, see, on the 10th April we already know that he will not give us money. So giving this information of 1 lakh rupees to our shareholders on 30th September will be wrong. Why? Because the shareholder will be thinking it is very good that we have to receive 1 lakh rupees from the debtor. But the management says we already know that we will not receive this. So this information is wrong. Understood? And we cannot give wrong information to the financial statements to our shareholders. So what should we do? As soon as they thought that what should we do, one member of the board of directors said that we can remove the debtors and we can make them zero. Understand this. He said remove the debtor and make the zero. Then another guy from board of directors said that we cannot do so. We cannot say the debtors were zero on the 31st March. Why? Because on 31st March, we never knew that whether my debtor will become insolvent or not. When did I get the information that my debtor is insolvent? I got the information on 10th April. Okay. Now you will say, sir, but there was already a condition. Exactly my point. There was just a condition. There was no guarantee. There was no event happened. Okay. Event is that when the debtor himself is saying, I am not paying any money. You do your business. I do not have a single penny. That is the event. That is the confirmation we have that he will not give me any money. So, as on 31st March, I have to say that my debtor value is 1 lakh rupees. I cannot ignore the fact that on 31st March everything was good. Understood? On 31st March everything was good. My debtor was also ready to pay me. Then another board of directors said, think, what should we do? How will we represent this information? Understood? He is thinking that what should we do? Now, if he is thinking, the idea will be given by Accounting Standard 4. What AS4 says? AS4 says, if the event is happened and the contingency was already present before the date of balance sheet, we call it as adjusting event. We call it as adjusting event. Understood? It means whatever event has happened after the date of balance sheet, the adjustment of that will be happening on the date of balance sheet, or the financial statements must be changed. We do not use the word changed, we use the word adjusted in the Accounting Standard 4. Understood? So, whatever event has happened, we have to adjust our financial statement according to that. Only when the contingency was already present before the date of balance sheet. Sir, I want to give you a situation. Yeah, give no. Sir, can you please erase this all? Sure. See. Tell me, what is your question? Sir, question is very difficult, sir. Yes, say no, Baba. See. Suppose this is 1st for 2022, okay. This is 31st March 23, okay. And our financial will be signed, say 30th June 2023. Okay, what is the question? He said, sir, suppose, as you said, financial statements are being prepared on 31st March 2023. I said, okay. Suppose fire incurred on 1st January. 1st January fire incurred at the debtor's factory, and before 31st March itself, on say 20th March, he says, bad debt. He says, I will not pay any single money. Then, is it also adjusting event? Is it also a adjusting event? Is his question. Now understand. It is not any event. AS4 will not come into this place only. Why? Because there is no question of AS4, because fire happened, bad debt also happened before 31st March. So while preparing financial statement on 31st March, I will just go and write in my profit and loss, bad debt. It is just the most simplest case. Okay, this we have been learning from 11th standard. Understood? From first PUC, that if both incident, both condition, the contingency and event, if both were before the date of financial statement, date of balance sheet, then you can directly write in the P&L bad debt. AS4 will not come here. It is not adjusting event. Understood? When will be the adjusting event? See, adjusting event will be when the fire happens on 31st March here, 30th June. The fire happened on 10th March and bad debt happened on 10th April. Contingency was before the date of balance sheet. Event was after the date of balance sheet but before the approval of financial statement. Remember this. This is what AS4 covers. And what does AS4 calls it? AS4 says if the contingency was there, event happened after the date of balance sheet but before the date of approval, this is called as adjusting event. Sir, sir, adjusting event ka matlab? Adjusting event means on 31st March, whatever financial statements you have prepared na, there you have to adjust this transaction also. You will go into this financial statement and pass some adjustment entry for this bad debt happened. Understood? Because we already knew that there was some condition before the date of financial statement. As soon as I said this, no, a student said, sir, I have one more question. Yeah, tell me, no. Sir, suppose same thing is there. 31st March we are preparing the balance sheet. Okay. 30th June is the date of approval. Okay. Sir, suppose fire happened on 10th April. Brilliant. Then, sir, suppose on 10th May our debtor says, I will not pay. Okay. Sir, is it an adjusting event? Now, what did I say? I said that contingency should be before the financial statement or before the date of financial statement. Okay. But in this case, contingency is after the date of financial statement. Event is also after the date of financial statement. It means what? It is not your adjusting event. It is your non-adjusting event. It means you will not adjust this event in the date of financial statement, or you can say in your financial statement. Whatever contingency or event, if both are happening in this period, that is after the date of financial statement, your financial statements will not change according to that. You will not make any adjustment into your financial statement. Understood? So, sir, what is this called as? See, simple. This is called as adjusting event because you have to make adjustment. In this case, it will be non-adjusting event. Understood? It is non-adjusting event. Very easy. Now, sir, can you tell us any like you can say an example which is non-adjusting event but still it is very different, or we have to make any changes in financial statement? Oh, so you are talking about exceptional cases? Yes, sir. See, there are exceptional cases obviously. For example, you can say suppose in this period, say there is some 31st March here, this is 30th June, this is 1/4/22, this is 23. Okay. Now, suppose after 31st March there is fire incurred at our own factory. Okay. And the fire was so huge in our factory that our going concern got affected. That we don't even know that whether we will be able to work in the next year or not, whether our factory will be able to recover it or not, because we are thinking, if we assume that there was no insurance policy for our factory. Okay. Now, on 30th June, when shareholders want our financial statements to check, if I give them this financial statement as on 31st March, this is all good, revenue is also good, assets are also good, the financial position is very good. But if suppose on this 10th April, there was huge factory fire, what will I tell my shareholders on 30th June? If I give them this report, it will be false. Now it means You can say, sir, but there was no contingency, because see, before 31st March, there was no situation, no, that there will be fire in my factory after 10 days. How would I know there will be any fire? There can be fire, there can be earthquake also, there can be flood also. Anything can happen. So obviously there won't be any contingency for that thing. Suppose directly fire happened on 10th April. Now what should we do? How we have to present this in our financial statements to let our shareholders know about this fire? See, understand this. If the fire was so huge that our going concern is affected, that my business is affected, the existence of my business is affected, that I do not even know that whether I can run the business or not, then definitely I have to tell my directors, I have to adjust my financial statements. Understood? Even if there was no contingency, there are no clouds, okay, but directly event happened, you still have to adjust the financial statement, and you will prepare all financial statement assuming that there is no going concern, and all the values you have to represent on NRV basis. We have learnt about NRV basis going concern in detail in accounting standard 1. We have solved sums also on going concern. Please go and check. As of now, we must remember, if going concern assumption is hit, then it is a very big deal, and therefore it is an exception that whenever such big event has happened that it can hit our company very badly, then you can say that our financial statement should be adjusted. Understood? This is the exception of the non-adjusting event. Sir, will we provide no information in the case of non-adjusting event? See, the non-adjusting event, what we will do, whatever is the director's report, we will just provide a single line, single information to our shareholders. But remember this, we will not change our financial statement. We will just provide the information in the director's report. Understood? Now, remember that example when the fire in the debtor's place and when he declared he is bad debt. If both are happening after 31st March, this is our non-adjusting event, and that non-adjusting event how will be present in the director's report. Non-adjusting event will have no adjustment, will make no changes, will have no effect in the financial statements. Understood this? This is our accounting standard 4. Now we will read all the definitions and all those things. See, the first thing we have here is the preparation and presentation of financial statement is the responsibility of the management of the entity. Sir, what does management means? Management is our board of directors. Management does not mean shareholders. Remember this. Shareholders are the owners of the company. Owners select 10 or 15 people who will be the directors of the company, who will manage the company. Understand this. There are millions of owners of Reliance, okay? Millions of owners, millions of shareholders of Reliance. Everybody will not take day-to-day decisions. Understood? They will select any 15 or 18 people. They will direct the operations of the business. That's why those people are called as the directors of the business. The total set of 15 to 18 people, when they sit together, they take the decisions. We call them the board of directors, or we can also call them the management of the entity. Okay, they will take all the decisions. Remember this, directors are just the employees of the company, owners are the shareholders. Okay, financial statements are approved by the board of directors in case of a company. In case of a company and in case of partnership firm, managing partners approve the financial statement. Okay, this repeatedly is coming. Now, what is the primary objective of the standard? Is to ensure the completeness, that whatever event has happened, whatever situation was there, we have to give the complete information to our shareholders. Is to ensure the completeness, that all the transactions and related information should be updated in the financial statement. Simple enough. Now, after this we have here is, what are the contingencies? We already know contingencies are the situations or the conditions at the balance sheet date. Understood? What are the events? Significant events occurring after balance sheet date and financial statement approval date. You can say between the balance sheet date, that was 31st March in our examples, and the financial statement approval date. The approval of financial statement 30th June, 30th September, that date will be given in the question. Don't worry about that, okay? Because it is not mandatory to keep that date. You can have any date for all the companies. They select their dates itself. But yeah, law gives a mandate that within 90 days or 180 days you have to keep that board of meeting or something like that, the annual general meeting, and you have to approve the financial statement, okay? What are the significant events? Those are the material events which influence the economic decision of the users of financial statements. See, whatever event is happening after the date of balance sheet date, it should materially affect the financial statement. If suppose if I can tell you for Reliance Limited, if suppose they are not able to match cash balance for say suppose 2000, 5000 or 10,000 rupees also, it is not material event for that. It is just immaterial for that. It is not of importance. So they can just ignore that, okay? Understand this. I am just giving an example. They generally do not ignore it. They will do, obviously they will find the reason, but that is not that important that I have to tell my all the shareholders that, you know, Mukesh Ambani will not go and sell in the mic that 10,000 rupees cash balance is not matching. No, no, no. These all things are not happening, okay? So the event must be significant. The materiality of the event is very, very important, okay? Now, after this, we will write the definitions for adjusting event. See, first is, what is adjusting event? See, I am writing here, if conditions exist on the balance sheet date and event occur after the balance sheet date, if conditions exist on the balance sheet date and event occurs after the balance sheet date, it provides what it should provide. It provides additional information about the conditions existing on balance sheet date. It means, I told you already, 31st March, 30th June signing of the approval of the financial statement. On 10th April, my debtor said I cannot pay, but fire on my debtor's factory was on 10th March. So understand this, what they are saying, additional information about the condition exists on the balance sheet date. See, whatever event has happened, about that event, the additional information, whatever was the additional information about that event, so that should be present here. So you can say, if the event is giving you additional information about the condition which was already present there, that is your adjusting event. Simple enough. And remember this, the additional information materially affects the amounts on the balance sheet date. Like, say fire incurred and I was supposed to receive 1 lakh rupees from my debtor, okay? He gave me only 99,500. Now you will say, sir, that is okay, no? Even if after happening fire at his factory, he still gave you 99,500. So the loss is very less, that is 500 rupees. So that is not even material, understood? That is not even material, so you can just ignore it. You will write there as bad debt or something. You will not say that this is adjusting event and all. You can say the additional information materially affects the amount in the balance sheet. 500 rupees is not material for the business, okay? Now, after this, This is the adjusting event. Already happened. Contingency was there. Condition was there. Event also happened. My debtor said that I will not pay you anything. Okay. Entire 1 lakh has become bad. Then what I have to do? Then AS4 says adjust the balance of assets and liabilities as on balance sheet date. As I have already told you, for adjusting event, we will change our financial statements. We will adjust the amounts in our financial statements. Remember, it should be material. It should not be immaterial. Okay. Now, concept number 4 we have is non-adjusting event. Very easy. If no conditions exist on the balance sheet date, like suppose after 31st March there was some earthquake and my entire factory has been destroyed. Now, how should I know before 31st March that there will be earthquake coming in my city? Very simple. So obviously I do not know about that. There is no condition also. But the earthquake was so big that entire factory got wasted, means entire factory came down. So then I will report it to my financial statements owners, you can say the shareholders of my company. How? See, if no condition exists on the balance sheet date, and if suppose subsequent events, like say there was a little fire and some goods worth 2 to 3,000 in my factory got damaged. Okay, say on 5th April or 6th April, some 5-6,000 rupees loss I had due to that fire. So I can tell you that does not affect materially my financial statement. Understood? See, if no condition exists on the balance sheet date and the subsequent events do not have material impact, on the amounts as on the balance sheet date, then what will you do? Then see, very important. Okay, then you will ignore it. Very easy. I will give you an example. See, suppose on the date of balance sheet on 31st March you wrote inventory, you have inventory worth say 20 lakhs. Okay, 20 lakhs as on 31st March. Now you will give this information to your shareholders on 30th June when you have to get them approved, when you have to get the financial statements approved. Suppose on 10th April, after the 31st March, after preparation of financial statement, on 10th April, there was a little fire, some incident, and 5,000 rupees of goods in our factory got burnt. Now you will say, sir, out of 20 lakh, we do not have now 20 lakh, 5,000 you should remove and all. See, you have 20 lakh rupees worth of goods. Okay, 5,000 is just immaterial. These small instances, these small incidents happens in the factory. Now and then it will happen once in a month or might be once in 6 months. So this can happen. These are not that material that you have to tell your shareholders about that. Obviously you will tell that in the next year. In the next year you will write in your profit and loss account that there was a loss due to fire. That is okay. But there is no need of change in the financial statement of the 31st March, the year which has already gone. Okay. In the next year you will obviously write 5,000 rupees loss. But that is so immaterial that we are not supposed to change this 20 lakh rupees amount here. Understood? That is 5,000 rupees we will check in the next year. Okay. Now see, it means you can say that is the non-adjusting event. This event will not have any material impact, so you can just ignore it. Just ignore it. Okay, because the impact is immaterial and we want material impact. Now what can be the second case? Same, a little change. If the subsequent event materially affects the amounts on the balance sheet date. If subsequent event have material impact on the amount on the balance sheet date, then what will we do? Then disclose it, or you can say disclose the transaction or the event in the director's report. Sir, we forgot the example only. Nonsense. See, subsequent event materially impacting means some earthquake or some fire happened after 31st March. Okay. How will that information be given to the shareholders? That information will be provided in the director's report. Simple. Now, after that, the following information must be disclosed, such as C. We already know that we have to disclose the event in the director's report, that we have to mention that there was earthquake, this much amount of loss has been faced, this incident happened on this date. So what are the information that must be disclosed, or what is the information that we have to give to our shareholders? It is, be very, very careful, disclose the event in the director's report. Okay, which information we have to give? We have to tell them about the nature of the event, nature of event. For example, earthquake, fire, cash embezzlement. You can say cash embezzlement means किसी ने पैसे चोरी कर लिए, our manager or some person we don't know who has stole the cash. Okay, that nature of event. After that, estimation of financial impact, or you can say financial effect. It means you have to calculate that how that event is affecting our financial statements. Understood? How much money has been stolen or how much loss we have. After that, I can write here the amount of loss must be calculated. That from earthquake or from fire, how much worth of goods has been burnt in the fire. So we have to quantify that, we have to estimate, we have to understand and calculate the value or calculate the amount of loss. Okay. Now some student will say, sir, what if we are not able to quantify that how much is the total loss as of that day, or suppose that earthquake came on 29th June itself, or it came on 20th June, and we have the meeting or we have the annual general meeting on 30th June. Only 10 days are left. So how will we do? It will not be possible to calculate. So what will we say? We will write, if it is not possible to estimate the loss, to estimate the effect, then you can just disclose the fact that financial impact cannot be, or you can say it could not be quantified in the financial statements. That we can just tell our shareholders that we need more time to quantify. It was not possible for us to quantify. Understood? Now, in any case, the amounts in the balance sheet will not be adjusted. Remember this, in any case, the amount will not be adjusted. Why? Because the heading itself is, the concept itself is non-adjusting event. Understood? Now, non-adjusting event whenever comes, remember you have to present the information in director's report. Oh my God, exception has come. What is the exception? See, even though it is a non-adjusting event, it should be adjusted on the balance sheet date. When? If law requires to do so. For example, say 31st March financial statements are signed. After financial statements are signed, in the, you can say, suppose we have a alcohol factory. Okay, we have some factory, we are in the business of alcohol. On 31st March, already financial statements are made. Done. On 30th June, we have AGM, we have to approve the financial statement, annual general meeting of shareholders. Suppose on 1st May, government passed an order that all the alcohol participants, or you can say all the businessmen who are in the alcohol industry, they have to pay a tax of 35% straight. See, it might happen. Suppose the tax rate till here was 20%. Now they are saying you have to pay 35% tax. Now, before 31st March, before this date, we had no idea of this happening. So this is the non-adjusting event. But on 1st May, the jump was so huge from 20 to 35 that it was of very big importance. It will have a material impact. So you can say it is the subsequent event which is having the material impact also. Now, if it is having such a big impact and the law, if law requires to do so, you can say that there will be, you can pass this information in the financial statement. Understood? Because it is so important. And suppose you can also say that if any law or any Companies Act 2013 makes it mandatory for the companies to change the financial statement as on 31st March, then you cannot have your idea. If law is telling you to change, you have to adjust your financial statements. You cannot argue. Understood? Second is if the event is affecting the going concern. Understand this. This event, what we understood right now, from jump of 20% to 35%, 15% higher tax. This means it can easily impact going concern for any company. Okay, companies might not have earned 35% of the revenue as net profit. If you are asking that also tax, it will become very difficult for the companies to survive. Understood? Understand this. If law told, then you have to make the adjustment. If going concern assumption has been hit, then also you have to make the adjustment even if it is a non-adjusting event. Simple. Now, we will do some capsules. Check. Before capsules, please write all the definitions in your notebook, so it will become very easy for us. Okay, read. While preparing its final accounts for the year ended 31st March, a company made a provision for bad debt at 4% of its total debtors, okay, as per trend followed from the previous year. So there was a company who used to prepare provision for bad debt of 4%, okay. In the first week of March 2010, a debtor for 3 lakh had suffered heavy loss due to an earthquake. See, I am making it 31st March 2010, year would have begun on 1/4/2009, in the first week of March. So somewhere around here is the first week. A debtor worth 3 lakh had suffered heavy loss due to an earthquake. Okay, the loss was not covered by any insurance policy. Brilliant. In the factory of my debtor, 3 lakh rupees, he suffered the loss due to earthquake. Now he did not have any insurance policy also. Okay. In April 2010, the debtor became bankrupt. In April 2010, this is the April month, he became bankrupt. So it means in April there was the bankruptcy. Now understand this. This bankruptcy is the event. The earthquake in the debtor's premises in his area, that will mark as the condition, or you can say the contingency. When earthquake came in his area, I already had an idea that I might suffer some loss. Okay, but that time I just had an idea. Which time? On 31st March 2010. I just had an idea that there has been earthquake, there will be definitely some locha. Okay, there will be some problem recovering money from him. But in April month, he himself went bankrupt. Bankrupt means he has declared, I do not have any money. Insolvent. It means, can the company provide for the full loss arising out of insolvency of the debtor in the final accounts for the year? First you tell me, is it an adjusting event or not? You will say, sir, it is very easy. You only taught us that if contingency is there before the date of financial statement and the event happened after the date of financial statement, but before approval, so it is the adjusting event. See, date of approval is not given here, but we will assume that the bankruptcy has been declared before the approval only. Okay. Now, this is adjusting event. So, If it is an adjusting event, what I told you, if it is an adjusting event, you will adjust your financial statement. Read this. The company provides for the full loss. Can the company provide for the full loss arising out of insolvency? See, what does it mean, providing for the full loss? Providing means creating a provision. Understand? AS4 does not deal with provision in very detail. AS29 deals with it, okay? But I am just telling you the meaning of provision on a lighter note. Please understand. Provision means providing funds, or you can say you are separating some funds from your total funds for a particular obligation, or you can say your liability, for which the amount is uncertain. Amount is uncertain. You do not know how much amount you had to pay, but you will know that there would be some provision, that there will be some liability. I will give you a few examples. Understand, okay? Remember this: provision for depreciation, provision for doubtful debts. These are not provisions only. First thing, this might be a shock for you. These are not the provisions, okay? They are using the word provision, but they are just the adjustment to asset. They are just adjustment in the asset account. See, provision for depreciation is used to adjust the fixed asset account. Provision for doubtful debt is used to adjust the debtors account. What are provisions account then? Please focus. The accounts are provision for taxation. That comes under current liability. What does it mean? That company knows they have to pay some amount of tax. So for that amount of tax, they are creating a provision. Suppose they estimate that they have to provide, or they may have to pay a tax liability of 1 lakh rupees. So they will create a provision. What does creation of provision means? See, understand. Suppose the company has earned 10 lakh rupees totally, okay? Now these 10 lakh rupees company has in their general reserves, okay? You can say statement of P&L also. Company knows that they have to pay for taxation. So out of these 10 lakh, they will take out 1 lakh and they will say this is my provision for tax. Why provision for tax? Because you have to make the payment. There will be a future outflow of resources. Then 2 lakh rupees for provision of repairs of machinery, repairs and maintenance. So that 2 lakh you will take out, 1 lakh you are taking out. So you can say the final balance will be 7 lakh only. Provision means taking out money from the main bank account, main balance, or you can say main profit. Main profit is shown in the statement of profit and loss. So provision will be appearing in the profit and loss. Provision is a charge against profit. Understood? So provision for tax, because you have to pay for tax. Provision of repairs, because you have to pay some amount for repairs. Those are called the provisions. Understood? Now understand, as of here we are creating provision for doubtful debt. That is not a provision. We are just saying that there might be this much amount of loss. Now understand, I will just remove this here. What has been said here, that can the company provide for the full loss? Can company say that I have already incurred the entire loss? How much would be the loss? 3 lakh rupees. Can company say this? See, company can create a provision for doubtful debt, or as they say, provision for bad debt. Understand this. As per para 8 of AS4, contingency and event occurring after the balance sheet date, adjustment to asset. See, adjustment to asset and liability. Provision for doubtful debt is just an adjustment, because you will reduce it from the asset account, and liability are required for event occurring after the balance sheet date that provide additional information materially affecting the determination of the amount relating to condition existing at the balance sheet date. This you have to write in every answer of your accounting standard 4, because it is the definitions of accounting standard 4, okay? Now after this you will write a debtor for rupees 3 lakh suffered heavy loss due to earthquake in the first week of March 2010, which was not covered by insurance. Then this information with its implication was already known to the company. Obviously, it was already known to the company because earthquake happened before 31st March. So we knew that in the area of my debtor, there has been an earthquake hit. Now, I have already told you, I had an idea that there will be problem in recovering the money known to the company. You can say the fact that he became bankrupt in April 10 is only an additional information relating to the existing condition on balance sheet date. This is the definition. See, this is only an additional information relating to the condition as on balance sheet date. That is what we have written here. See, additional information about the condition existing on the balance sheet date. Please remember, the wordings are very important. The answer you are writing, see, these are the answers from the study material. Okay, so remember the wordings, the language of the answer must be same. Okay, after that, accordingly, full provision for bad debt amounting 3 lakh should be made to cover the loss arising due to the insolvency of debtor in the final accounts for year ended. What was the year ending? Year ended was 31st March 2010. So it will be year ended 31st March 2010. Simple enough. See, creating a provision means what will happen? They will go in the profit and loss and they will write here to provision for doubtful debt 3 lakh rupees. Understood? Then the impacting will be balance sheet, current asset, debtors appearing here. Suppose say suppose the total amount of debtors are 30 lakhs, or you can take any other figure here, just say 1 crore. Okay, 1 crore, then they will write a less PDD 3 lakhs. It will be 97 lakhs. Only for this case I am telling. Okay, whatever provision they are creating every year, that is different. So this is how they will represent. Now after this, capsule number 2, let's see. In preparing the financial statements of Lotus Limited for the year 31st March 2010, you come across the following information. State with reason how you will deal with this in the financial statement. Okay, tell us the information. The company invested 50 lakh in April 2010 in the acquisition of another company doing similar business, the negotiations for which had just started. It means year already ended on 31st March 2010. The company invested 50 lakhs in April. It means after the date of balance sheet. Acquisition of another company doing similar business, the negotiation for which it just started. Suppose negotiation started here, or suppose even if the negotiation started before the date of balance sheet also. Remember this, you cannot say negotiations are the conditions existing on the balance sheet date. It is the contingency. No. Why? Because understand, negotiation has no impact. It might have been possible that they are negotiating and they do not get into any result. There may not be any acquisition. So negotiations, only negotiations, you cannot say okay there was condition existing already, we can say that negotiation resulted in this investment. No, negotiations are of no importance. What would be the important thing? See, suppose before 31st March all the paperwork has been done, title of the property has been transferred or title of the company has been transferred, all the paperwork has been done, or say paperwork is incomplete, amounts has been transferred, payment has been made, then we can say that okay there is some strong contingencies there before the date of balance sheet. Just negotiations are of no use. Okay, so we can say as per AS4, contingency event occurring after the balance sheet date, event occurring after the balance sheet date which do not affect the figure stated in the financial statement would not normally require disclosure in the financial statement, although they may be of such significance that they may require a disclosure in the report of approving authority. Approving authority is the directors. Okay, here to enable users of FS to make proper evaluation and decision. So you can say the investment of 50 lakhs in April 2010 for acquisition of another company is under negotiation stage and has not been finalized yet. Okay. On the other hand, it is also not affecting the figures stated in the financial statement of 2009 and 10. Obviously, see, there will be no impact on financial statement. No, incurring, you can say, the payment to buy a new enterprise. How will the financial statement of the already existing enterprise will change? It will not change of 2009 and 10. Hence, the details regarding such negotiation and investment of 50 lakhs in April 2010 in the acquisition of another company should be disclosed in the director's report. Why it should be disclosed? To enable our users of financial statement. Who are the users of financial statement? Our shareholders, creditors, the people who have provided us loan, the banks, the money lenders, to make proper evaluation and decisions. Understood? Simple enough. Now Further, capsule number 3. Check. Cashier of A1 Limited embezzled cash. Embezzled means the cashier stole the cash. हिंदी में क्या बोलते हैं? चोरी कर ली. Amounting to 6 lakh rupees during March. Okay. However, same comes to the notice of company management during April. Okay. अप्रैल में मैनेजमेंट को पता लगा कि मार्च में कैशियर ने चोरी कर ली. Financial statement of the company is not yet approved by the board. With the help of AS4, decide whether the embezzlement of cash should be adjusted in the books of accounts for the year March 2012. Okay. So they are asking us that it is the adjusting event or non-adjusting event. Okay. Second question is, what will be your reply if embezzlement of cash comes to the notice of company after approval of FS by the board of the company? Then what you will do? See. Suppose this is the year end 31st March. This is date of approval. Let's say 30th September. We are just assuming. It is not given in the question. Suppose after 31st March, in the month of April, management found out. This is given in the question. In the month of April, management found out that the cash has been stolen in the month of March. Okay. It means the condition was already there. Now, the event happened that the management got the information of the cash embezzlement. Condition was already there, event has been occurred, so it is the adjusting event. What is the second question? What will be your reply if embezzlement comes to the notice in after approval? Say after 30th September, management finds out here that there was some cash embezzlement in the previous month March. Then what will you do? That is not the case for AS4. AS4 will not deal with that. Understood? AS4 deals with the event which are happening before the date of approval of financial statement. This date is important for AS4. Understood? Now, so sir, what will we write for the second answer? That is not covered by AS4, and we can say it will be covered by AS5. You can say prior period item. See how. As per para 13 of AS4, asset and liability should be adjusted for event occurring after the balance sheet date that provide additional evidence to assist the estimation of amount relating to condition existing at the balance sheet date. Condition was already there that the theft has been done. What was the event? Event was the management found out about the theft. Okay. Then come to the case, though the theft by the cashier was detected after the balance sheet date, हालांकि चोरी का पता अप्रैल में चला था, मतलब बैलेंस शीट डेट के बाद पता चला था, बट इट इज़ एन एडिशनल इंफॉर्मेशन materially affecting the determination of cash amount relating to condition existing on the balance sheet date. Obviously 6 लाख रुपए की चोरी, 6 lakh rupees की चोरी, it is materially affecting the cash amount. As on financial date, financial statement when you are preparing on 31st March, the cash balance will be impacted, materially effect will be there on the cash balance. Therefore, it is necessary to make the necessary adjustment in the financial statement of the company for the year 31st March 12 for recognition of loss amounting to 6 lakh rupees. Understood? It means it is your adjusting event. It is your adjusting event. Understood? Now, after this, what does it say? If embezzlement of cash comes to the notice of company after approval of FS by board, then the treatment will be done as per AS5. Okay. This being extraordinary item. See, we have already discussed extraordinary item AS5 in detail. AS5 video is already uploaded. You can go and check. Okay. This being extraordinary item should be disclosed in the statement of profit and loss as a part of loss for the year ending 31st March 13. The nature and amount of prior period item should be separately disclosed on the statement in a manner that its impact on the current profit can be perceived. When you will be studying AS5, when you will see the video completely of AS5, you will understand how it will be shown in the profit and loss. Understood? Now, next question we have here is capsule number 4. Check. Neil Limited has its corporate office in Mumbai. Okay. Sells its product to stockists all over the India. Very good. On 31st March 2013, what is happening? They are saying the company wants to recognize receipt of checks bearing date 31st March 13 or before as check in hand by reducing trade receivable. So see what they are saying. First understand the first statement. That is very important. See, there is a balance sheet. 31st March, trade receivables are there. Trade receivable debtors, whatever you can call, say 10 lakh rupees. Okay. Out of 10 lakh rupees, the total balance we have received check for say 3 lakh rupees. Okay. The dates are of 31st March and before only 20th March, 25th March. Okay. You can have the before dated check. It is not the problem. Because you can deposit the check within 30 days or you can say within I think 90 days from the date represented on the check. Okay. So the date is not the issue. See what they are saying. Out of the trade receivable of rupees 10 lakh, we received the check of rupees 3 lakh. Okay. Company wants to recognize receipt of checks bearing the dates as check in hand. This is trade receivable 10 lakh already shown. What company wants? Company is saying, I want to show this as like this, that trade receivable 7 lakh, and then we want to show that in our asset check in hand 3 lakh. They are asking us that we want to show like this. Okay. So what they are saying, the check in hand is shown in the balance sheet as an item of cash and cash equivalent. All checks are presented to the bank in the month of April and all are realized also in the same month in normal course. They are saying जितने भी check मिले, we deposited the checks in the April month और सबके पैसे आ गए. Very good. State with reasons whether each of the following is an adjusting event and how this fact is to be disclosed. Which each of the following they have given here. Number 1, number 2 is given here. Okay. We have to check everything and we have to tell whether these are adjusting event or not. Okay. Now see, we have to tell whether these are adjusting events or not. Check. The first thing is checks collected by the marketing personnel of the company from the stockist on or before 31st March 2013. It means, see, we are sitting in Mumbai and our stockists are everywhere. Say Delhi, Bangalore, Coimbatore. So from all the stockists, the marketing personnel who is sitting in the Mumbai, he has received the checks. Okay. Now checks are collected. Now they are saying the checks are collected on or before 31st March. It means this is 31st March. Checks are collected here itself. Amount received in April month. Okay. Now it is adjusting event or not? See, very easy. Read the answer here. Checks collected by marketing personnel is an adjusting event as the marketing personnel are employees and therefore are representative. Okay. Handing over of check by the stockist to the marketing employees discharges the liability. Therefore, check collected by the marketing personnel on or before 31st March requires adjustment from the stockist. They are saying you already received the checks, no? So out of your total trade receivable, you have to less the amount of 3 lakh rupees because 3 lakh rupees you have already received the checks. Now, even though these checks are presented in the bank in the April month, उससे कुछ फर्क नहीं पड़ता when are you posting your checks, okay, in the bank. That is not important. Hence, collection of checks by the marketing personnel is an adjusting event. Understood? Because condition was already there before date of FS. After that event happened and we received the money. So it is your adjusting event. Then such check in hand will be shown in the balance sheet as cash and cash equivalent with a disclosure in notes to accounts about the accounting policy followed by the company for such checks. Simple enough. Now, point number 2 says checks sent by the stockist through courier on or before 31st March 2013. See, 31st March 2013. In April month, we received the payment because we deposited the checks. They are saying on or before 31st March. Suppose I am taking on only. On 31st March, checks were sent by the stockist through couriers. So, from Delhi, Bangalore, the stockist on 31st March sent through post or say through courier, and obviously if they are sending courier on 31st March, say I received checks on 2nd or 3rd April. Understood? I am just assuming that on 31st March they are sending the courier. Now there can be an argument that, sir, suppose they have said before also. So before can be 20th March also. Say like that, before can be 1st March also. But remember, if they have mentioned on also, so the extreme limit is 31st March. Extreme limit is 31st March. So if I am taking 31st March as the date and the courier has been put from them on 31st March, obviously I will receive on 2nd March, 2nd or 3rd April. Understood? 2nd or 3rd April. Then only I will be receiving the checks. Okay, after that I am depositing the check in the April month, I am receiving the payment. All those are different things. But I can say before 31st March, I did not have any checks. Understood? So on 31st March, if my trade receivable are worth 10 lakh, I will show it 10 lakh only. Why? Because I do not have any checks in hand. I cannot say I will remove the amount from the trade receivable. Okay. See. Even if the checks bear the date 31st March or before and are sent by the stockist through courier on or before 31st March, it is presumed that the checks will be received after 31st March. Collection of checks after 31st March does not represent any condition existing. Thus, the collection after balance sheet is not an adjusting event. So, you can say it is a non-adjusting event. Checks that are received after the balance sheet date should be accounted for in the period in which they are received, even though the same may be dated 31st March or before. If I have received the check after April or say after 31st March, it is non-adjusting event. My focus is before 31st March, was there any condition? Was there any situation? Was there any kind of contingency? In this case, there was no contingency. I had no checks. So it is a non-adjusting event for me. Simple. It does not represent any material change affecting financial position. So no disclosure in the director's report. This is your capsule number 4. Now, capsule number 5. C. In its final accounts for the year 31st March 2014, Z Limited made a provision for 3% of its debtors. Okay. On 10th March, a debtor of 5 lakhs suffered a heavy loss and became insolvent in April. See, he suffered a heavy loss on 10th March, but he became insolvent in April. Okay. The loss was not insured. Okay. State giving reasons if the company may provide for the full loss in its accounts for the year ended this. See, what company generally do? Company said that we create a provision for 3%. Okay. So for this particular debtor also, a debtor of 5 lakh, company would have created a provision for doubtful debt. They created provision for 3% of 5 lakh. That is nothing but 15,000. Okay. Now company is asking us if the company may provide for the full loss. It means they are saying that we should provide provision of 15,000, or because we now know that 5 lakh entire thing has become our loss, so provision should be 15,000 or the entire amount of 5 lakh. See, provision for doubtful debt, provision for bad debt means what? That company expects that this much can be the loss from this debtor. Okay. Generally company used to expect that 3% can be the bad debt. But now company is saying, because we know that everything we will lose because he himself has suffered a huge loss. So can we prepare a provision for entire 5 lakh rupees? The answer is obviously yes, because it is the adjusting event, because conditions were already there in the March month. Now see the answer. According to para this of accounting standard 4, adjustment to a certain liability are required for event occurring after the balance sheet date that provide additional information materially affecting the determination of amount relating to condition existing at the balance sheet date. Condition existing at the balance sheet date for events occurring after the balance sheet date that provide additional information materially affecting the determination of amount of the condition. In the given case, though the debtor became insolvent after balance sheet date, yet he had suffered heavy loss before the balance sheet date, and this loss was the cause of the insolvency. Therefore, the company must make full provision for bad debt 5 lakh. It means you can say this is the adjusting event. Simple. These are the very common questions of our accounting standard 4. Okay. Now after this, next question we have here, capsule number 6. Check. A major fire has damaged the asset in a factory of a limited company on 5th April, 5 days after the year. It means this is our year, 5th April. There was a fire. Okay. The loss estimated is 10 crore. Oh my god. 10 crores rupees loss. Out of which 7 crores will be recoverable from the insurance. It means you can say out of 10 crore, 7 crore is relax. How much is the problem? 3 crore is the problem. But still 3 crore is a material amount. It is not the immaterial amount for anybody. Okay. Explain briefly how the loss should be treated in the final accounts. See. The loss due to breakout of fire is an example of event occurring after the balance sheet date. Now understand this. On 31st March, any management, they cannot say, okay, we think that there will be fire in the future. You cannot think so, okay. Nobody can expect fire in the future, okay. The event being in the nature of a fire which is unpredictable does not relate to condition existing at the balance sheet date. It has not affected the financial position as on balance sheet, and therefore it requires no specific adjustment in the financial statement. It is not an adjusting event. Now, however, paragraph 8.6 AS4 states, see, there might be a question in your mind that, sir, are we supposed to mention paragraph numbers also? You are not supposed to mention it. It is not mandatory, but see, in every standard, no, there are only 1 or 2 might be paragraph. They are not present in every standard also. Might be in some standard. Some 2 or 3 paragraph number they are mentioning. If you can do that, it is very good. But remember, do not fluke your paragraph numbers, okay? If you remember, very good. If you do not remember, it is not bad, okay? It is okay. However, AS4 states that disclosure is generally made of event occurring after balance sheet date, that is in subsequent period, that represent unusual changes affecting the existence of the enterprise. It means what? Our favorite concept, the going concern. Read the line again. In subsequent period that represent unusual changes which affects the existence of the enterprise. It means it affects the going concern of the enterprise. मतलब कि enterprise जिंदा भी रहेगी या नहीं, इतना बड़ा loss हुआ है, it can affect the existence itself after the balance sheet date. In the given case, it is nothing but we are talking about the exception, okay? We have already read about the exception. In the given case, the amount of loss in a factory is material and it may be considered as an event occurring affecting the substratum of the enterprise, affecting the going concern of the enterprise. Hence, as recommended, disclosure of the event should be made. You have to put the disclosure. Understood? Now, capsule number 7. Check. The accounting year of D Limited ended on 31st March 2018, but the accounts were approved on 30th April, okay. On 15th April, a fire occurred in the factory and office premises. The loss of such a magnitude, it was not possible to expect the enterprise to start operations again. Oh my God, what does it mean? It means going concern assumption has gone. It means firm, the enterprise is thinking we will not be able to start the operations again. Now, it means they are saying that, see, state with reason whether the loss due to fire is an adjusting event or non-adjusting event and how the fact of loss is to be disclosed by the company. We have to tell 2 things, it is adjusting or non-adjusting. Second is how we have to disclose this information. See, first paragraph is same, we know this obviously. The fire occurred in the factory after the 31st March but before approval of FS. The loss is of such a magnitude that it is not reasonable to expect the D Limited to start operation again. That is, the going concern assumption is not valid. Since the fire occurred on 31st March, the loss on fire is not a result of any condition. Obviously, you cannot think that there will be fire in the next month. No. Now, but the loss due to fire is an adjusting event. Why adjusting event? See, it was not adjusting event in general, but it is adjusting event because it is affecting my going concern assumption. That was important. Understood? Now, after this, they are saying it is an adjusting event. The entire accounts need to be prepared on a liquidation basis, or you can say net realizable value basis, with adequate disclosure by the company by way of note in the financial statement in the following manner. They have to give the note in financial statement. What is the note? Major fire occurred. Major fire occurred in the factory and office premises on 15th April, which has made impossible for the enterprise to start operation again. Therefore, the financial statement have been prepared on liquidation basis. We have discussed going concern assumption in detail in AS1. You can go and check. Okay. Now, after this, capsule number 8 we have here is, with reference to AS4, state whether the following event will be treated as contingency, adjusting event or non-adjusting event. You have to tell whether it is contingency, adjusting event or non-adjusting event occurring after balance sheet in case of a company which follows April to March financial year. Okay. This is just the introductory paragraph. What is the first case? A major fire has damaged the assets in a factory on 5th April, 5 days after the year end. However, the assets are fully insured and the books have not been approved. See, when the assets are fully insured, will you say that there has been a material loss? You will say there has been no loss only. Understand this. 31st March is the balance sheet date. Suppose any year, say 2022. Okay. On 5th April has been a fire. So on 5th April has been a fire, but insurance is there. So first is there cannot be any condition, directly event, because it is a fire, and that to everything we have the insurance. It means it is nothing. Okay, we don't need it. Fire has occurred after the balance sheet date and also the loss is totally insured. Therefore, the event becomes immaterial and the event is non-adjusting in the nature. So sir, will we not tell our shareholders that there was fire? We will tell. See, this is the non-adjusting event, and non-adjusting event you will disclose in the director's report. You will disclose in the director's report. You can also write in approving authorities report, but in majority of the question you can say directors are the approving authority. So approving authority report can also be used. Any of the term can be used. Okay, using approving authority report will be better. Now, after this, the second they are saying is, a suit against the company's advertisement was filed by a party on 10th April to 10 days after the year end, claiming damages of 20 lakhs. See, a suit was filed by a party on 10th April. It means after the date of financial statement, after 31st March the case was filed. So till 31st March we have no idea. So you can say a suit against the company's advertisement was filed. So the answer we have here is the contingency is restricted to condition existing at the balance sheet date. However, in the given case, suit was filed against the company's advertisement by party on 10th April. Therefore, it does not fit into the definition of contingency and hence it is a non-adjusting event. By 31st March se pehle, before 31st March, we have no idea that some person will be filing a case against it. So, it is a non-adjusting event. Very simple. After this, it sends a proposal. Oh, proposal has come to purchase an immovable property for 30 lakhs in March. Okay, now see, we have sent a proposal in March. The book value of the property is 20 lakh as on the year end date. Okay, however, the deed was registered on 15th April. It means what? See, in the given case, proposal for deal of immovable property was sent before the closure of the books of account. This is a non-adjusting event as only the proposal was sent. There is no agreement. No. So, and no agreement was affected in the month of March. That is before the balance sheet date. So, you can say it is the non-adjusting event. Why? I have already told you this in the previous question. See, if there are just negotiations, if there are just proposals, they are of no use unless there has been some paperwork or there has been a transfer of amounts. Okay. Now, so you can say it is a non-adjusting event. Now, the next question we have here is, the terms and conditions for acquisition of business for another company have been decided by March end. Okay. but the financial resources were arranged in April and amount was invested 40 lakhs also happened in April. So now, as the terms and conditions had been decided by the March end, acquisition is an adjusting event. Why? Because in March, the important work has been done. The terms are done, the conditions are done. Conditions were nothing but our contingencies only. Now, it is an adjusting event occurring after the balance sheet date. Adjustment to certain liability is required since the event happened. It's stated in the financial statement for the financial statement year ended 31st March. So you can say it is the adjusting event. It is an adjusting event because there were already conditions before 31st March. Now, the next part we have here is theft of cash rupees 2 lakhs. Okay. By cashier on 31st March but was detected in the next day after the financial statement have been approved by the directors. It means, see, next day after the approval, not next day after the 31st March, no, after the approval. So, see, you can say 31st March, on 31st March only he stole the cash. On 30th September was the date of approval. After date of approval, the next day on 1st October, the management found out about this embezzlement. So, since the FS have been approved before detection of cashier, it becomes a non-adjusting event and no disclosure is required in the report. Why? It is the non-adjusting event. Why no disclosure? Because the event happened after the date of approval and our accounting standard deals with if the event has happened before the date of approval. But if it is happening after, it is obviously the non-adjusting event. Okay, you cannot make any disclosure. Why? Because your approval, date of approval is 30th 9. Understand this. On 30th September, already the directors have approved the financial statement. Next day you found out. So now you cannot make any changes. No, because they have already approved the financial statement. Understood? It is very simple. If they have already signed the financial statement, where will you make the changes? After this, check. Capsule number 9. Read very carefully. It has just come in 2019 May revision test paper. Okay. The Board of Directors of New Graphic Limited in its board meeting held on 18th April considered and approved the audited financial result along with auditor's report, okay, of year ended 31st March 17 and recommended a dividend of 2 rupees per equity share, okay, for the year ended 31st March and if approved by the members at the forthcoming AGM of the company on 18th June, okay, the same will be paid to all the eligible shareholders. Discuss on the accounting treatment and presentation of the said proposed dividend in the annual account of the company. See, first I will tell you what is happening. 31st March 2017. Till here we are preparing the financial statement. Now on 18th April, just after the 18 days, okay, there is a board meeting, board of directors. Board of directors meeting is different. Annual general meeting of the shareholder is different. First board meeting will be held because they will finalize the accounts. Now, when board meeting was going on, they proposed dividend. It means they are just saying that we can provide dividend to all the shareholders because we have good amount of profit. We can share the profits with our shareholders. Okay. After that proposal on 18th June, remember this, board of directors cannot decide that they will give proposed dividend. No, they can just propose. They can just put an idea that we can give the dividend. So you can say they are proposing the dividend. Okay. Now when they have proposed the dividend, if the same dividend is approved by the shareholders on 18th June, then you can say the dividend will be provided. Okay. If approved by the members of the company, the same will be paid to all the eligible shareholders. Okay. So see, board of directors proposed, you can say they recommended giving dividend. Now it depends on the shareholders. Now they are saying discuss on the accounting treatment and presentation of proposed dividend. They are saying we have proposed dividend on 18th April. Okay. Now is this an adjusting event or non-adjusting event? What AS4 tells about this? See, understand this. As per the amendment in AS4, the event which take place after the balance sheet date are sometimes reflected in the FS because of statutory requirement or special nature. Okay, however, dividend declared after the balance sheet date but before approval of financial statement are not recognized as a liability at the balance sheet date because no statutory obligation exists at that time. Understand this. On 31st March 2017, the company never knew that we are going to provide dividend or not. Why? On 31st March, we have no idea about dividend. Why? Because board will recommend the dividend. Then shareholders will say, okay, we are giving you authority, you can pay the dividend. So on 31st March, there is no condition for dividend. So how can you say that it is the adjusting event? Understood? Now, after this, no provision, hence such dividends are disclosed in the notes to financial statement. No provision for proposed dividend is not required to be made. You cannot make provision for the proposed dividend. Such proposed dividend are to be disclosed in the notes to accounts only. Accordingly, the dividend of 4 crore which is recommended by the company in its board meeting shall not be accounted for the year irrespective of the fact that it pertains to 16-17 and it will be paid after the approval in the AGM. It doesn't matter whether shareholders are approving or not. Understood? There was no condition before 31st March. AS4 understands only this much. Was there any condition? No sir, there was no condition. So it is not the adjusting event. Understood? This accounting standard is very easy if you can focus that we have to just check whether there was condition before the date of financial statement, that is 31st March. Okay. Now, capsule number 10. See. It says the financial statement for the year 17-18 was approved by the board of directors on 15th July. The following information is provided. A suit against the company's advertisement was filed by party on 20th April. अरे भाई केस 20 अप्रैल को किया 25 लाख रुपए का 25 lakh rupees. Was there any condition before 31st March? You will say no sir, there was no condition. So obviously it is a non-adjusting event. See, it will have no effect on financial statement and it will be a non-adjusting event. We have already discussed about case, so I am not reading the entire answer again. Okay. Now, the term and condition. See, now many questions might be repetitive also. The term and condition for acquisition of business of another company have been decided by March 18. Okay. We have decided by the March 18. But the financial resources were arranged in April and amount invested of 50 lakhs. It means they are saying in March terms and conditions are finalized. That is important. Terms and conditions were important. They are finalized. Amount can be transferred later. That is no problem. So you can say that it is adjusting event. How? See, this is clearly an event occurring after balance sheet date. Hence, necessary adjustment to a certain liability for business is necessary. Necessary adjustment is necessary. It means this is the adjusting event. Understood? Because the condition was already there. No, terms and conditions are already finalized. So you can say it is the adjusting event. Now, theft of cash, again the same thing, 5 lakh by the cashier on 31st March but was detected on 16th July. Now see, 16th July, when was the date of approval? Date of approval was 15th July. It means after directors have approved the statement, after that on 16th July we have found out that there is a theft of cash. So you will do nothing. There is no treatment for that because the reports, the director have already approved everything. So no treatment is required. Simple. Now, company sent a proposal to sell an immovable property for 40 lakh in March. See, it is just a proposal. The book value was 30 lakh. However, the deed was registered on 15th April. It doesn't matter. Before 31st March, there was no contingency. There was no condition. Everything is happening after 31st March. Understood? So it is a non-adjusting event. See, it means there will be just a disclosure in the director's report. There will be no adjustment in the asset and liability. Remember this, it is a non-adjusting event. No adjustment to assets for sale of immovable property is required in the financial statement for this year. Understood? You can also write here, but the disclosure in the director's report is necessary. You can mention that. After this, a major fire has damaged the assets in a factory on 5th April. However, the assets are fully insured. If these are fully insured, it means we have no loss. If there is no loss, then there is no problem. It is obviously a non-adjusting event because it is happening on the 5th April. The condition of fire was not existing. Only the disclosure regarding event of fire and loss being completely insured may be given in the report of approving authority, that is your director's report. Only that is enough. It is your non-adjusting event. Understood? Now, capsule 11 says, see, they are just changing the wordings. They were approved on 25th July. The year is ending on 31st March. Negotiations with the another company for acquisition of business was started on 21st January only. Oh my God, see. Year end is 31st March. Date of approval is 25th July. They are saying the negotiation was started 21st January only. Here only they started negotiations. But investment happened on 22nd April. 22nd April, they invested 40 lakhs and acquisition happened. I have already told you. There is no use of this word negotiation, proposal. They are of no use. Okay. Now, it means you can say there was no condition before the date. You can say that it is just the non-adjusting event. See. Disclosure should be made in the report of those events occurring after the balance sheet date that represent material changes and commitment affecting the financial position. The investment of 40 lakhs in the acquisition should be disclosed in the report of board of directors to enable users to make proper evaluation in this. It means it is a non-adjusting event. Obviously, understood? Because they are saying it should be disclosed in the report. It means it is a non-adjusting event. It means no adjustment to be made in the asset and liability. After this, the company made a provision for bad debt of 4% of its total debtors as per the trend. In the second week of March, a debtor for 250 had suffered heavy losses due to an earthquake. The loss was not covered by insurance policy. In May 2019, the debtor became bankrupt. These are just the repetitive questions. I will attach the documents. We have already discussed such kind of questions. This is also a suit which was filed. See, this is the new question here. During 1819, Hari Limited was sued by the competitor for 13 lakh. Based on the advice from legal counsel, Hari Limited provided a sum of 8 lakh in the financial for the year ended 31st March 19. On 26th May, the court decided in favor of the party alleging infringement of the trademark and ordered Hari to pay the aggrieved party a sum of 12 lakhs. Okay. So, now read. It is very important. See. As per AS4, adjustment are required for event occurring after the balance sheet date that provide additional information materially affecting the determination of amount relating to conditions existing at the balance sheet date. These 4 lines will be same, okay, everywhere. In the given case, since Hari was sued by a competitor during the 1819 for which the provision was also made by it. See, Hari already made the provision for 13 lakhs. Check. Hari was sued by a competitor for 13 lakh. Based on the advice from legal counsel, Hari Limited provided a sum of 8 lakh. 8 lakh rupees ka provision Hari Limited already made because Hari thought that competitor might win the case. So I am creating provision of 8 lakhs now only. Okay. It means condition was already there before 31st March. Remember this. Okay. Now, the decision of the court on 26th May for payment of penalty will be constituted as an adjusting event. Understood? Because it is the event occurred before approval of the financial statement. Therefore, Hari should adjust the provision upward by 4 lakh to reflect the award decreed by the court. जो भी कोर्ट ने ऑर्डर दिया है, बिकॉज कोर्ट ने ऑर्डर दिया है 12 लाख रुपीस पे करने का, हमने प्रोविजन बनाया था 8 लाख रुपीस का, सो वी विल इंक्रीज अ प्रोविजन बाय 4 लाख. सिंपल. नाउ cashier of Hari Limited embezzlement, it is again the embezzlement of cash, same. These are the checks dated, we have already discussed check dated. These are just repeating the questions. It is the case of proposed dividend now. This is again the earthquake. We have just taken all the questions from study material and the different question papers, so that's why they are repeating in nature. The company has filed a legal suit, again this is a case. Now see, this is important. The cashier of the company embezzled cash of 9 lakh rupees in January, okay, and returned back 5 lakh in Feb. Very good. The same was detected on 5th April. It means condition was already there, but they found it out on 5th April. It means 4 lakhs rupees are still embezzled. Check. An event occurring after the balance sheet date may require this, again the same thing. As the fraud of the company is detected after the balance sheet date, but before the approval, it is necessary to recognize the loss amounting to 4 lakh and adjust the accounts of the company. It is your adjusting event because condition was already present. Now, this is again the question of theft. See, an agreement to sell a land for 30 lakh to another company was entered into on 1st March. Agreement has been entered into. It means conditions are already present. Okay. The value of land is shown as 20 lakh in the balance sheet as on 31st March. See, they have already entered into an agreement that they will sell that land for 30 lakh. Still the company is doing a mistake. That nonsense of India, no. They are already saying that land still is 20 lakhs. Hey, when you have already entered into an agreement to sell 30 lakh, why you are showing it in your balance sheet at 20 lakh? You cannot show this land, okay? See, in the given case, sale was carried out before the closure of the books of account. This is clearly an event occurring after the balance sheet date, but agreement was effected on 1st March. Agreement already declared, no, before 31st March that we are selling. Some stupid people. That is, before the balance sheet date, registration of the sale deed happened on 15th April simply provides additional information. It is just the additional information that registration happened on 15th April. But every title agreement were transferred on 1st March itself. Agreement was made on that day only. So, therefore, adjustment to asset is necessary. It means whenever they are saying adjustment is necessary, it means it is the adjusting event. Now, the negotiation with another company for acquisition of business was started on 2nd Feb. See, here only the negotiations are started. What happened in the previous case? In the previous case, agreement was entered into. Agreement is important. Negotiations, proposal, they all are, they have no value, okay? It will be non-adjusting only. See, hence no adjustment to asset and liability is required. These words, as soon as you see, no, it should click your brain. If they are negotiating, it means they are of no use. It is non-adjusting, okay? Next. The last capsule we have here is 25th. See, MEC Limited could not recover amount of 8 lakh from the debtor. The company is aware that the debtor is in great financial difficulty. The company is aware of this. It means conditions are already there. Now, the account of the company for the year end were finalized by making a provision, but still they are making a provision of 25% only. They are thinking that, okay, even if he doesn't pay, they are thinking that 75% we will recover, 25% we might not recover. In May 2011, the debtor became bankrupt. Now, what will you do? And nothing is recoverable. Do you advise the company to provide for the entire loss? Tell me, you are the chartered accountant. Do you advise them to provide for the entire loss? It means, do you advise them to create provision for entire 8 lakhs? Definitely yes, because it is the adjusting event. See, as the information given in the question, the company was aware that the debtor was in great financial difficulty at the time. Bankruptcy is only an additional information of the condition which existed on the balance sheet date. Therefore, the company is advised to provide for the entire amount because it is the adjusting event. Understood? Simple enough. This is your accounting standard 4. We will learn in detail about provision, contingent liability, contingent asset in AS 29. Thank you so much.